Welcome to TradeTheMBI.com. This is John's report. It's for the 29th. Nice little positive pushback above the 23%. This is that MBI Magenta staying above the yellow line here. When we see that crossover, you expect a dip below if you're going to get any kind of cave. And we also saw that we had DOC with midterm buyers here in the green crossing above signs. So that was enough bullish that we expected supports to hold and actually did fairly decent. Didn't quite make it past the 38%, but was enough for now to keep things. But interestingly enough, almost created a positive extreme on that short move. So again, it becomes challenging for buyers at this particular state as we're sort of in that status hold here from where the breakout took place. Well, at least the secondary breakout. Still have that first primary one to fill back in. Won't take much from a news standpoint to cause that to take place. It's just a question of are they seeing value in this opportunity with the decline that's taken place, and obviously some are pushing back in, thinking that there's opportunity there. But again, I still think it becomes problematic when you look at the broader issues and things like the ability to get better yield, safety of treasuries, and that it draws from the market. And with the amount of uncertainty that still lingering, and the Fed continuing to claim that it's going to be aggressive, we look to things like oil and say, hey, are we going to be seeing, further inflationary pressures going forward? And literally this becomes just an unemployment issue and a wage thing, which gets very tough now given what we see from the reporting of statistics these days. Becomes very difficult to gauge what is real versus inflated. So we always tend to look at participation rates in that. And while things are holding on, they're not stellar, but they're not horrible. And as long as that's the case, the status quo exists, and that's should be enough to maintain supports for the market at this particular stage. We're not getting anything dire. The euro, of course, that recognition that the Fed is not giving up and the ECB crippled at this particular stage, given the weakness that exists within the euro union. People don't appreciate the war in Ukraine and what a drain that is on the resources, and particularly as we head into fall. You have no Nord Stream. You now have the issues in Niger that are affecting the ability of that pipeline. There's going to be some problems from an energy standpoint in Europe, and that's already had a significant effect on growth in that. And it only puts greater pressure on Eurozone ability. And so even at this range, you get into the difficult zone where the central banks really want to be able to step in and support at this range, because now you're at the bottom side of it, and they really can't afford to let that go below that 106 range that we've talked about, because it creates systematic problems. You already see it with the Fed and the overnight desk, and how much money is being drawn in the special facilities and that. And while the Fed does that, quantitative easing on the back end of things, it becomes a problem as credit gets tighter. And particularly in the Eurozone, we look at issues with the banks and no new lending taking place in that. And that's going to be a problematic issue for what's already a disaster zone from banking. And that's probably where we would see cracks. U.S. isn't facing the same level of that, but as we see more drain on the Fed, becomes significantly growing, not something that we're going to see now, but definitely something we look towards the later part of fall and early part of winter. Certainly will start to have its impact. Gold creeping up just a little bit. I expected that we would start to see some resilience there. I mean, it was quite the push down, and a little bit of the positives starting to pop in there. What we're not getting from it is a matching correlation with cryptocurrencies, still at the doldrum, all that breakout news from before, and really in a difficult spot here, because any negativity at this particular stage, and you could see a significant breakdown, but for now it's pretty much just blah, dead zone, so to speak. Same with ETH, looking pretty much identical, as even the positive buy signals are just weak. It's reflected in the shakeout here. Minus 29 is just nobody's interested at this particular stage. From the 50K standpoint, so after we had the peak, dip down, cleared out all the weak cans. That allowed buyers to jump back in. Was nice upside trade to that. Now we're in this little cross zone. We can see 50K standpoint, MBI white leading at this particular stage, but magenta still above yellow. So it's just sort of one of those inconclusive moments at this particular stage. But little weakness adding. And you can see what it looked like from intraday. All positive extremes on the breakout, so we know that would get filled back in, and sure enough, they filled it all back in. So beautiful there. Did it again, created a whole new set of positive extremes, filled them right back in. And then the late day rally, which finished things off. And that's been maintained here in the post market. Scroll through all the waste of time. Let me get a grip on that one. And you can see that as we get closer towards the open, a little bit of fade off in between there, but still holding kind of flat at this particular stage. So the ranges continue to be excellent intraday as far as that goes, but we're still going to have to wait for end of month trade, which is about to happen, and that should create a little bit more volatility going into the holiday of the return of everyone from their summer break into September. And that's when things will start to get a little more interesting, and we'll start to go over some of the broader projections once we get a little clarity from some of the readings. As always, though, continue to look for me on Skype chat. Trade well. We'll talk again later.